Welcome to another episode of the Investing with IBD podcast. And just like last week, we're going live. It's 2 p.m. Pacific time, 5 p.m. Eastern time. And I have, let's see, it's September 11th, 2024 today. So it's a Wednesday. So instead of getting this on Thursday mornings, we're going to be getting this to you a little bit early. And we have a lot to talk about. And I've got a great guest to help us get through the action of today's market, Harold Morris. Man, Harold, you've been working here for quite a while. I remember when you started in customer service, and now you're one of the senior product coaches for our premium products. He does a lot of coaching on Leaderboard, using MarketSurge, just figuring out how to use the IBD methodology. And he's known for his patience, and he's also known as an options expert. He does a lot of options trading. And so that's what we're going to kind of talk about a little bit today, so that we can kind of get a sense of, in a choppy and sideways market, are there other ways to make money? And Harold is often on our IBD live show once a week and sharing a lot of his option trades that he puts together. So welcome to the show again, Harold. Nice to have you.
Well, thank you. Thank you for having me.
Yeah,
we're going to have fun here.
Right. And again, Harold and I, we go way back, and we're on the show IBD live together a lot of times on Thursdays.
Yeah.
So yeah, we kind of, we know where we're going, right? And
Yeah.
so
Yeah.
let's just start with the market. I mean, the NASDAQ composite up 2.17% today after really struggling below that 50-day moving average line, and closing above the 21-day moving average line. I'm sorry, I did not have this on my bingo card for today. It was a little unexpected. So, you know, Mike Webster and I have been talking a lot about, we talked about this on our swing trader status update. Mike has mentioned it on IBD Live a number of times, that we really kind of had this expectation breaker, especially on the S&P 500, where we started a power trend, immediately fell, and then it just, got below the 50-day moving average line. S&P 500 up 1.07% today. Harold, I'd love to get your thoughts.
Yeah, it was a very volatile day. We started out, with the sell-off. I was looking at a 5-minute chart of the NASDAQ, and it was taking a nosedive. But then all of a sudden, we hit the lows and reversed to the upside and had a very strong close above that 5,500 level. A nice round number. You always want to see a stock or index get above a round number like a 5,500, and then you see the close at the top of the range, above the 21-day exponential moving average. So very strong day. Nice reversal to the upside in today's market action.
Yeah, and I'll just kind of share with everyone that hasn't heard some of our other commentary. One of the things that we've been talking about is this high at 55.6616. This was the high of August 1st, which, again, this was another expectation breaker to the downside, where we had a follow-through day on the S&P 500 and then immediately failed. And this kind of set up this, I don't know, would you call this a double bottom, Harold? What do you think?
I mean, it has the look of a double bottom, and we kind of treated it like a double bottom. Now, it didn't quite work out that way, but at the time, it looked like, okay, this was going to work. But it's a market, and anything can happen. So we're prepared for it. We look at what the market's doing and then react accordingly. It looked like it was going to have a breakout over the middle of that W, and we went kind of sideways after that, and then we started to break down. So that was telling us, okay, this might be a failed breakout, which it turned out to be, and we did sell off below the 21-day, below the 50-day. Now we've recovered both of those. So the market, it's been very unusual.
Yeah.
Very unusual moves, but it is what it is, and we just have to go with it.
Right. Well, and I'll just back up real quickly, just to kind of show what it looked like yesterday. And I just found the action very unconvincing personally, that we had this bad break on Friday and we were staying inside that range. So it just seemed like a very weak recovery. I'm going to go to the 30-minute chart, because I think this was something that was discussed on IBD Live today. Oh, it's not letting me do that periodicity. Let me go to SPY for the 30-minute. oh, you know what? It's because I backed up and went to past day. So, you know, we had that bad break on Friday right here. Again, a little unconvincing. And then, I mean, even today, it looked like we were going to challenge the lows intraday on the S&P 500. But then by the end of the day, we're getting right above the highs of Friday, and a very different look. So now, of course, this doesn't mean that we're out of the woods.
Right.
So I guess how do you temper your enthusiasm on a day like today, where it could be very easy to just say, "Oh, it's time to go in guns a-blazing," or is it really kind of time for a little bit more caution given the volatility that we've had recently?
Yeah, it's definitely time for caution. So on the S&P, I was looking primarily to go short. You know, the low of September 6th, just a few days ago, last week, I said, if we get below that, then this might be an area where I can go short or go bearish using options. And we tested it. Today's low got real close to that, but we bounced off it and made that strong move to the upside that we talked about earlier today. So when the market changes, I have to change. Now, dude, I didn't do anything with today's move. I still want to see. Still not convinced, but I don't mind, sitting on my hands because the market's got to prove itself to me. I don't have to be in the market. So I
Mhm.
want to see some more strength to the upside. Can we get some follow through tomorrow based on yesterday or today's move? Only time will tell. We'll just have to wait and see.
Mhm. So how do you kind of get yourself invested? Because I mean, if you wait too long, then it can feel like you're chasing a lot of stocks. If you get too early, then you again risk just getting shaken out because you're getting too eager, especially if you get too much too fast, right?
Mhm.
So, what is your approach? Are you more incremental, or hey, once you show me that you can really get out of this sideways action, then I'm going to put a meaningful amount pretty quickly.
Yeah, so I tend to go after it. I'm very conservative, very cautious in this market, but when I do see a setup that looks good, especially if it's a stock or ETF that I've traded in the past, so I have some conviction about that ETF or stock, then I will say, okay, I've done my work. It looks like the setup looks like it's going to work. I'm going to put some money to work into it because one of the things that happened to me back in 2022, uh, most of the market was down, and I
Yeah.
was staying real small. And
Mhm.
I saw something that would work, and I would look at my P&L. I'm going, okay, I know I've had some stocks that work, but my P&L wasn't really moving. Well, I was too small, so I
Yeah.
decided to increase my position size, and I still do that today. So I don't mind going in large because I have sell rules, and I'm not hesitant to implement those sell rules.
hmm So let's go ahead and switch over to the NASDAQ real quick. And again, the NASDAQ, you can just see this by the relative strength line that it's been in a downtrend. So this has been lagging the S&P 500. And, certainly if you look at, a lot of times we look at FNGS, which is the MAG
Mhm.
7. MAG 7 plus, let's just say. There's a few
Right.
extra ones in there.
Right, a lot of
This
high beta stocks in there.
Right, exactly. So, this has had a pretty poor relative strength showing, but it does kind of have a pattern here, and this was breaking a downtrend of that. So, do you think it's time for these to kind of see their day in the sun again? I'm also going to just real quickly note that SMH, which is the VanEck Semiconductor ETF, for as ugly as this has looked pretty, recently, coming all the way down to its 200-day moving average line. It was
Mhm.
a 5% gain today, recovering a lot of damage that was done last week. And again,
Yeah.
last week was pretty bad.
Yeah, yeah, and you see it tested that 200-day. When was that? Back in the early August, where it
Yeah, that
tested it. Was
August
that
5th with
August
the
5th?
yeah,
Yeah,
with the
that
carry
August 5th.
trade
Yeah,
and everything
right,
kind of sky is falling type action.
right. So it tested that 200-day, made a nice move to the upside, got up to the 50-day, and then it couldn't get above it. So I've been looking at SMH as possibly a short candidate or using bearish options. Now, it's kind of a long ways away from the 50-day moving average. I think I was looking earlier; it's about 5% below the 50-day. So I wouldn't want to put in a, a a short trade now, because if it goes up 5%, of course that trade is working against me. So I'll be watching this ETF, watch and see how it behaves as it gets up to that 50-day moving average, and see, okay, is it going to hit the 50-day moving average like it did in mid August and roll back, or is it going to break up above it? So we'll have to wait and see. But this is something I've got on my radar. This is an ETF that I've traded a lot. So I mentioned a moment ago that when stocks or ETF that I trade on a regular basis, I have a lot of conviction in them. I understand how they move. This is why I don't mind going in with a regular size or even a larger if I happen to take a trade in this instance, this ETF. So it's got to prove itself to me before I even consider trading or putting money into this stock or
Mhm.
this ETF.
Yeah. So let's take a look at some of the other indexes. A lot of people, of course, we're talking about how much stronger the Dow Jones Industrial Average has looked recently, whereas a lot of the indexes were below their 50-day moving average line. This came right down to it and got support. So it wasn't up as much today, only up 0.31%, but a lot of kind of price discovery on this one. Also, just looking at the Russell 2000, a big outside day, here. But again, it still has, a lot of ways to go before
Yeah.
it even comes to Friday's, Friday's high from last week. It's
Yeah.
still well below that after coming
Yeah.
down all the way to the 200-day.
Yeah, yeah. So today's move just kind of proved that there were some buyers out there.
Mhm.
We had thought that they went into hibernation, but there's some buyers out there, and most of them jumped in today's market, and pretty much everything had a really nice move to the upside. I didn't see what RSP did earlier in the day; it didn't look so good, but I
And
didn't. Yeah.
RSP, of
So, oh
course, is
wow, look at
the
that. That's a
equal weighted S&P 500. So again, compared to the Nasdaq up 2%, S&P 500 up 1%, this is basically flat. Now, again, it came back quite a bit from as ugly as it looked intraday, but
right.
we were kind of saying how this was a little bit stronger in terms of its relative strength, but it seems like is it is the breadth trade over and we're back to back to the Mag 7?
Well, possibly. We really don't know. It was a nice move on the RSP today. The first hour and a half of the market today, RSP looked horrible, and we just thought, okay, is this the end? It's not really good for the overall market when when this equal weight is selling off like it was. But just like the rest of the market, it did, found support at the 50-day. It made a nice move to the upside. Um, did it close? Yeah, it closed positive.
Yeah,
Not a whole
barely.
lot, but still.
0.08.
Right. Okay. Yeah, but that's a whole lot better than what we saw like in the first hour and a half of today's market. So, had a really nice reversal in today's market.
Mhm. Now, one of the other areas that we were kind of seeing holding up a little bit better was some of those areas of a little bit more defensive in nature.
Hmm.
And it just seemed like the rug kind of got got pulled out from under you today.
Right. Right.
XLP, which is the sector spider staples, down 0.93% on a day so strong for the indexes. This is down 0.9%. XLU, another kind of defensive area. I mean, this was up 0.31%, so not too bad. XLRE, which has been one of the strong areas. I mean, look at the uptrend. This has still been trading above its 10-day moving average line. And, this was down for the day. So
Yeah.
again, what do you do when you're kind of getting this rotation? It's only one day,
Yeah. Yeah.
but
That's the
do
key.
you get ready for it or what?
Well, we thought the same thing back on August 5th. We
Mhm.
had that big down day, and we thought, okay, are we rotating into defensive areas? We just had that one huge down day, and then the market bounced off that. Same thing could happen again, but again, only time will tell. We'll just have to wait and see, what the market does. I also look at Procter and Gamble as a gauge as to what some of the defensive areas of the market are doing, and it was down today. So that's a sign that if you look at this Procter and Gamble, almost looks like a growth stock, but it's typically and historically a defensive play. That's where institutions tend to go to park money during times of weakness. But it had a sell off today, closed at the bottom of the range, did so on looked like right at the average volume, but it was down today. But yeah, maybe this might be a rotation into some more of your high beta names like our Mag 7.
Hmm.
Like I said, we have to wait and see. I was looking at NVIDIA, the pre-market. NVIDIA is looking pretty strong, at least pre-market. So it's still kind of early, but pre-market it's looking pretty good. If things remain the same at close to tomorrow's open, it's going to get up above that 50-day moving average there.
Yeah. So again, we already talked a little bit about SMH, and certainly NVIDIA is in a better position than SMH. There's certainly some weaker names in there that are dragging the ETF down, but NVIDIA is a very heavy weight in this, and
Right.
it did get above the 21-day moving average line, and also right there at the 50-day moving average line. So kind of go through some scenarios here for us.
Hmm.
If we were to like get turned away from the 50-day moving average line, would you kind of go back to that short mindset?
Possibly, yeah, because Nvidia it just has such an influence on the overall market. So if Nvidia gets, if let's say it gets turned away, let's say tomorrow it gets up above the 50-day and reverses, uh, most likely it's a symptom as to what's going on in the overall market, and the market most likely will reverse too. So yeah, Nvidia is going to be key to what's going on in the market. It's kind of a proxy for what's going on in the market. So we'll have to wait and see.
Hmm. Let's just take a look at one of the other strong semiconductors. This is Broadcom, ticker symbol AVGO.
Hmm.
This one, right there at the 50-day moving average line as well,
Hmm.
actually closed slightly above it today after getting
Yeah,
support at the 200-day.
yeah. So that's looking pretty strong. You may consider drawing a trend line. You see the 177 area. Maybe draw a trend line across that 172. That could be a nice entry into this stock here. Or depending on how aggressive you are, above the 50-day, you might start putting a little bit of money to work just so it gets some money into the stock. And if it gets above that trend line, to start building on your position there. So Broadcom looking pretty strong, but
Mhm.
again, just like we've been saying all along, you got to wait and see what the overall market's going to do.
Right. Let's go ahead and shift gears a little bit. And for this segment, what I'd like to talk a little bit about is your option strategies,
Hmm.
because one of the things that's kind of nice about when you're on the show on IBD Live, and when you're kind of discussing your strategies, is that you don't necessarily need a raging bull market, and you don't need huge destruction of a bear market that is like even like something like 2022, where it was just persistently ugly for growth for quite a while. You can really kind of find find nuggets in any type of market. So describe a little bit about what it is that you do
Yeah.
to do
So first off, I'm still using the growth canceling principles to find stock trades, and then I like to apply options to something that I find that looks bullish. Primarily, I'm on the long side looking for moves to the upside, but I'm looking for something that's got some liquidity. It's got really good liquidity. And then once I determine it's got the nice liquidity, then I'm going to go to the option chain and I want to see what the bid ask is to see, okay, do we have wide spreads? Are they pretty tight? If they're pretty tight, like a AVGO, then that's something I would be looking to put together an option trade on.
hmm And you do a lot of spread trades. So,
Yeah.
uh, kind of describe. There's two types of spread trades, at least vertical spreads that we typically talk about. There's the credit spreads, and then there's the debit spreads.
Mm.
And then of course you can have the bullish ones and the bearish ones. So
Yeah.
how do you kind of decide which one you're going to use in what situation.
Well, I like the credit spreads because if when you're putting together a credit spread, your break even is typically below where the stock price is. And a lot of your debit spreads, that break even can be above the stock price. So that stock would have to make a move, or ETF would have to make a move to the upside before you can even consider that you're at the break even. I like it when it's down below the stock price. So that way, if the stock does, maybe it breaks out a little bit and it declines a little bit, well, I'm still in good shape because I
Mhm.
haven't gotten down to my break even. So that's primarily why I like to sell premium, because of that break even. It's typically, in most cases, it's going to be below the stock price, so you have a lot of wiggle room for that stock to move around in.
Yeah. So maybe you could walk us through one, just again, so kind of people get an idea here. And I'm going to pull up GLD. And this was a trade I think that you were talking about today.
Yeah, it was
Yeah. Okay.
GLD. Yeah, it was. This is one I presented on IBD Live this morning, and I was
And I'm
looking
sorry,
at.
maybe first, let's go ahead and take a look at the chart,
Yeah,
just to kind of orient ourselves at what some of these levels are. So first of all, let's talk about GLD. Why GLD? What was the pattern or the technical action that was intriguing for you?
yeah. So you look at it technically, it's above the 21 day exponential. It's above the 50-day, whereas a lot of the indexes and a lot of your big names like the Max 7 are below those those levels, those
Mhm.
moving averages. So it's showing what we call relative strength, and that's what you always want to look for in a market that we're in. You want to see something that's showing some relative strength versus the overall market. In addition to that, it's gold. So with the volatility that we've seen in the market, gold tends to be, and historically has been a place where, okay, I can park some money in gold because it's a place where it in the past hasn't moved so much in the past. So it's a good place where you can park some time of money in times of uncertainty. So you look at the setup and the well, historically what it's been used for. That was my attraction to this trade here. And
Mhm.
if you look at the chart, also, I always key in on that 21-day exponential. That's that green line on the chart, and you see that's above that 21 day. So when I was looking at
You mean
this
above the 50
ETF,
day?
what was that?
So you look at the 21 day. You said above the 21
It was
day, or
above.
you
Yeah, it
mean?
was above the 21 day. It's also above the 50 day. But I was
Okay.
keying in more on the 21 day because you see it's been finding support up that
Okay.
21 day. You see that for the last week, and if you keep going a little bit to the left, in early August, it found support back then. So that 21 day has been a key support level for this ETF. So just looking at that, so when I was looking to put together this trade, one of the things you can do with MarketSurge is you can, if you hold your left mouse button down on the price, it'll tell you the value of the moving average. So this morning before the market opened, that's what I was doing. So I held my left mouse button down on which would have been yesterday's price bar, and I saw it. Okay, the 21-day exponential is right around 230. So I could, okay, well, let me use that'll be my short strike. So if it does pull back to that 230 level, if I sell a put, selling a put is a bullish option trade. So if I sell a put, if it comes down to the 21 day, it gets support, then then that bullish part of the trade will start working there. So I
Mhm.
looked at that, and then I like to use spreads. Spread trading, you're not going to hit big home runs. I like to, using a baseball analogy, uh, spreads is, you're going to get a lot of singles and doubles. So I
Mhm.
like to use that, and I just like to put on a lot of trades so I can make my, get my equity curve to move to the upside there. So I saw that 230 was was what the 21-day exponential moving average was. So I went into my trading platform. I saw, okay, where is 230? Okay, 230 was a nice place. So I went to um, put my short strike there. So I sold the 230 put, and then I
Mhm.
went up to the 225. I bought that for protection. So that's how you structure a spread trade. And at the time, I believe the credit was for $1.56 or something like that. And
Hmm.
so, and I was looking at it, about a half hour before the market closed. It was still the stock, their ETF, it didn't move much today. So, if you still want to use that trade, you can still use the same strikes, selling to 230 put, and then buying the 225 for protection.
Hmm. So what ends up happening again, and this is one of the things that's kind of nice about spread trades is, normally when you short a put, you have to have cash, available to buy the stock in case you're assigned. But in this case, because as you said, you've got that 225 as protection. It basically, once you get down that far, you're going to start making money on your 225 long put. That's going to kind of cancel out any money that you're losing on your short put. So
Right.
you don't
Right.
have to have all that cash readily available for potential assignment.
Right.
So,
And as I mentioned earlier about the break even being below the stock price, in
mhm,
this case, selling that 230, buying the 225, the break even was right around 228, which
yeah,
was a
probably
little bit
228,
below.
50. Hmm.
Yeah, what's a little
Hmm.
bit below that 21-day exponential moving average. So
Hmm.
there's where that wiggle room comes into play. Where, okay, if it pulls back, you're still in good shape.
Hmm. And it also looks like it's kind of 228.52 was this level that it kind of got the support at the 21-day moving average line last. So,
Mm.
yeah, a logical area that your
Yeah,
break even is. So,
right, right.
so in terms of kind of a stop loss, do you look at your option trade or do you look at the stock price
I
as
look at the stock price.
okay?
So I look at stock price and see, okay, where is the stock trading? So for example, I had a spread trade in Netflix.
Hmm.
Netflix today was trading below the 21-day exponential. Now it did recover. This was earlier in the day. So of course I sold it. And what did the market do? It turned around. But at the
Hmm.
time, it was trading down below the 21-day. The market was really weak, so I said, I'm just going to get out of it. I was already down in the trade. I already had a loss in it. But uh, bottom line is, like, my point is, I was using the moving averages and support and resistance to determine when I'm going to sell the stock rather than the option itself.
Right. Okay, so going back to GLD, one more thing I want to kind of just, and this is very useful in terms of how you figured out where to put your strikes. Um, every option trade has an expiration date. How
Mm.
far out do you go with your expirations?
Yeah, I like to go out anywhere between 45 to 60 days out to expiration. Now, this particular trade, I was a little bit shorter than that. I think it was 37 days
Mm-hmm.
to expiration. The next, I like to use the monthlies. So the next monthly strike was like 65 days out. So I said, I didn't want to go that far out. Let me just go with the 37 days out and go from there. The way the market's been behaving, a lot of things can happen within a 37-day period. So it wasn't bothering me, and I just like the numbers. The way this setup was working out, with the strikes and the break even that we talked about just a moment ago.
Mm-hmm. And do you, for credit spreads, do you kind of prefer to go on the shorter side because, in terms of time frame, because a lot of times the time value of the spread really can start losing value pretty quickly, especially in
Yeah,
the last 30 days before expiration. So as a credit spread, since you're selling that put and that's where you're getting the bulk of your profit from, that can really work in your favor because you don't know
yeah,
whether the stock is going to go up or down, but you do know that time is going to pass. That's something that
right,
you can count on, right?
right. So with options, you do have what's called theta decay,
Mhm.
which means that the if the stock or ETF doesn't move much, you can make a little bit of money on theta decay. But my whole purpose of putting together these trades is, I'm looking for that price appreciation to the upside. And as I mentioned a moment ago with the break even, I do have a little bit of wiggle room. So yeah, this trade, it could go sideways a little bit. Don't want it to go too far, because if not, if it goes sideways too long, then nothing's going to happen. And if that's the case, then okay, well, I might just get out of the trade and move on and look for something else.
So let's go through some of now that we kind of know our parameters, we know our strike prices, we know our stock that we're using, and we know that we're doing a credit spread with puts. Let's go through some of your numbers. So I'm going to pull up a slide, and this is just based on the trade as you set it up. So as you said, the width of the spread, that's just basically 230 minus 225, 5 points. And you mentioned that it was a $1.56. So
that was the credit that received. So
okay, that was the credit received.
Right.
Okay, so this is calculating your probability of success, right? So that's step
Right.
one. And that's your risk. So your potential profit is the 156, right? And your potential loss is the 344s.
Correct.
With the spreads minus the premium received. Okay, what's step number 2?
Well, the probability of success, that is a two-step process. Determining your actual risk, which we figured out that's the width of the spread minus the $1.56. So our actual risk in the trade is $344. And then to determine the actual number, the probability of success, you take that 344 divided by the width of the spread, multiplied by 100, and it gives you the probability of success. In this case, it was 68.8%. So I like it when that probability is in the mid to mid 60s to the mid 70s. That's where it's kind of like the sweet spot that I like to see. So we're right in that sweet spot, pretty close to 70%. So a nice number for probability of success.
And then if we go to the next slide, talk a little bit about this return on risk.
Yeah, so I calculate the return on risk. That return on risk, well, to calculate it, and this slide is not, it's $1.56. It looks like there's $1.56.7. But anyway, it was $1.56 divided by the actual risk. That was my mistake. So it should say $1.56 divided by the 344 times 100, and that gives us a actual risk in the trade of 45.35%. Now that's if we hold the trade to expiration. So if it works out, again, it was 37 days out. If you get a nice 45% return in 37 days, that's a pretty nice return. But I typically do not hold that trade until expiration, but I still like to calculate the number just to see, if I happen to hold it that long.
Now, sometimes you can, I guess, get some crazy numbers, right? I mean, especially when you're talking about, even in this case, 45% in that amount of time seems crazy. It's like, wow.
Right. Exactly.
Why wouldn't everyone do this? But what is kind of the downside there? That probability of success, I suppose.
Right. So, if that risk gets too high, then you're typically taking on too much risk. So that's the downside. So, but there's times when I calculate the numbers and I see the return on risk at 80%. I said, okay, well, that's a little bit too high. Now I don't have any kind of benchmarks that I keep, but when that number gets too high, that's a little bit of a red flag for me for the trade there. So 45%, that's kind of on the high side for this particular trade. So I was going with it because again, this is an ETF that I've traded in the past, so I'm very familiar with it. I've had success with it in the past, so I went with it despite that somewhat high number. But again, as I mentioned a moment ago, that percentage is if you hold the trade until expiration, which I rarely do. But I still like to calculate the number just to see what that number turns out to be.
And so since you brought it up, since you don't hold generally until expiration, and we know that you're going to do a stop loss based on what the stock price does, if it undercuts certain levels of support, where your break even is. But what about on the plus side? So if you're not holding till expiration, when do you part ways with the option trade and take your profits even?
Well, first off, I like to take profits at 50% of the credit received. So remember that $1.56. You just divide it by 2, and that's going to give you your profit level, which I believe was 78 cents in this case. So if I'm in the trade and I see, okay, we're right at that 78 cents, then I'm going to close the trade out and move on for something else. And I could hold on for a little bit longer, but the old expression, bulls and bears make money, but pigs get slaughtered. So if I get 50%, I'm going to lock in that profit and move on and look for something else. So that's my profit target, 50% of the credit received.
Okay.
Okay. Next thing I like to look at, okay, if I'm still in the trade and I keep an eye out on the days for expiration. So we get down to like 21 days for expiration, that's when I'm going to make a decision as to what I'm going to do with the trade. So if I'm slightly down and I look at the market and I just say, you know what, I'm down on the trade. The market's not looking good. I'm going to get out of it. That's what happened with Netflix earlier today. I was already down on the trade, and the first hour and a half, 2 hours of the market looked very ugly. Netflix was trading below the 21-day exponential. So I just said, okay, I'm going to get out of it and move on and look for something else. So, and I wasn't at the 21 days to expiration yet with Netflix. It's just I didn't like the technical action of a Netflix. But the other thing, I kind of digress a little bit, but I like to look at that 21 days to expiration. So if I'm in the trade at 21 days expiration, then I'll make a decision as to what I want to do. I could roll it. Rolling is a way of buying time where I can roll it to a further expiration to buy time to see if the trade is going to work. Or let's say maybe I have a small profit. Maybe I don't have that 50%. Maybe I'm at 35 or 40. But then I just might take that and move on and look for something else because, worst thing you can do is, you reach your profit target and then you say, well, you know what? I'm going to hold on a little bit. I've
Let
done
me see if
pretty
I
good
can
with
get it
this.
just a
Yeah,
little bit
yeah,
more,
and
right?
yeah, all right. And I'm going to see if I can
Famous
squeeze a
last
little more.
words.
Yeah, I'm going to squeeze a little more juice out of this and see what I can get. And what happens? It goes against you, and then you're kicking yourself for not following your rules. That's why we have these rules. And so, the 50% is where I like to do it. And again, I like to make a decision as to what I'm going to do when I get to 21 days to expiration.
Yeah. Okay. So one thing that's really important here, position size. So if we look at your slide again, the number of contracts. Now, it can be very tempting because you see these big numbers of return on risk. That's possible. And you're like, well, why wouldn't I just back up the truck on this?
Yeah.
And I guess the reason is because you have to remember, hey, options, they move faster. It can be a little bit tricky there. So how do you determine your position size so that you're not doing too much damage to your portfolio when you're wrong?
All right. So determining position size, and that's different for everyone. So the example that I've been using is the $2,500. So that $2,500 represents a 2%, 2% of the overall portfolio. So if the trade just goes totally bust, okay, I'm out $2,500, and hey, it's not a big deal. All right. So I got the correct position size. So position sizing, regardless of how you trade, whether it's options or you're buying the shares, buying or selling the shares, that position size is extremely important. That's how most people get blown up, is they didn't position size properly, and and if it goes against you, then it's really tough recovering. And it's not just the money, the dollar aspect of it. It's your mental capital.
Right.
You did something and you lost that money, and it doesn't feel good doing so. So position sizing is extremely important. So I go in with the mindset that, okay, if it totally goes awry and I lose that, okay, it's not going to hurt my entire portfolio. And I've got, I'm not putting my entire portfolio to risk there.
So again, in this case, let's say you had $100,000 portfolio, 2,500 would be 2.5% risk there. If you had a $200,000 portfolio, maybe you would say 5,000. Or if you were a little bit more of a conservative investor, maybe you would leave it at 2,500 and say, I'm only willing to risk, not 2.5, but 1.25% of my portfolio on this trade. So one other element here. Are you doing just all options in your portfolio? So do you have a lot of these positions, until you basically run out of buying power?
I in this market, no, But most of the trades I do are option trades. Now I do occasionally, like I do have a position in NVIDIA, but that's a stock position. As NVIDIA, and I took that position in I think it was May of last year. So I've got a nice profit in NVIDIA, and but NVIDIA was just one of those stocks that I'd say, okay, AI, that's the new thing. I want to get some shares. I want to hold this for the long term. I did the
Hmm.
same thing back in 2020 with Tesla. I
Hmm.
bought shares in it. I no longer have Tesla, but at the time in 2020, Tesla was the leader in the market. So I had some shares in it because it was showing it was the leader back then. So um, uh, a lot depends on, well not mostly I'm looking to do options. So when I'm looking at a stock, first I like to see, okay, what does the option chain look like? What's the bid ask on it? If it doesn't
Hmm.
have the bid ask that I like, that I want, then I'll move on to it. Depending on in most cases, it doesn't matter what the stock is. I'm looking to put some option trades on because the nice thing about option trading is the capital efficiency. You're not
Right.
putting it together as much, putting the much capital to work as you are buying the shares. So
Hmm.
one option contract is equivalent to 100 shares of stock. But if you just do the math, the option is it's much more cost efficient using option trades. It's just that with spread trading, you need to get a lot of those trades in place because, again, as I mentioned earlier, it's like hitting singles and doubles. You can win this. A lot of good baseball players that made the Hall of Fame hitting a lot of singles and doubles, but uh, with spread trading, yeah, it is. You're not going to hit the big home run, but it can be very profitable. And it can do so in a very short period of time, also.
Hmm. So one other thing on this risk before we wrap this up, um, do you kind of go delta neutral? Are you putting both bullish and bearish trades on, or do you tend to go one direction based on what the market is doing?
Yeah, I tend to go one direction.
Okay.
I should do some little bit of hedging, having
Mhm.
some bearish trades on, but me, I tend to go one direction, and I'm not looking to get a balance there. So if the market is looking strong, then
You want to participate.
I'm gonna go in that direction there.
Mhm.
If it isn't, then obviously I'm not. But no, I don't try to balance things out with some um, some bullish trades and some bearish trades just to get what you, like you mentioned, delta or neutral. No, I
Mhm.
just don't do that.
Okay, so you kind of wrapped up a lot of these in a single slide, and we've mentioned all of these points, already about managing the trade. So if we just kind of look at the next slide, the managing the trade, we've got kind of your bullets here.
Yeah,
So
yeah,
you've got the stop loss, break even. That's a play, and again, you're a lot of times using the stock chart itself to kind of help you determine that, and you've set your strikes, and you know what the premium is that you receive to help you kind of do all of that, right?
right.
You also said take profit at 50% of credit received. So in this case, as you mentioned, 78 cents. And then you also said that once you get to that 21 days till expiration, DTE, days till expiration, that's when you're going to make a decision on what do I do with it now? Am I going to roll it? Am I going to see if I can get a little bit more? Or based on where you're at, you just take it if you need it. And then this is one that you didn't talk about, though. This
Yeah,
last rule, taking profits if the trade is up 25% or more within the first 1 to 3 days. So
yeah.
why this rule?
So again, as you mentioned a moment ago, options tend to move pretty quickly, and if I get that much of a move in a trade that quickly, I'm just going to take in the money, I'll take the profit and move on. Because as we also mentioned that the worst thing you do, you have a really nice profit, and then you wait trying to squeeze some more out of it, and then it starts going against you. You're up maybe 30%, but now you're only up, 12%. Well, 12% is not a nice gain, but if you just had a rule, which is what this is a rule that I use. If I'm up 25% or more, I'm going to take that money and run. Sometimes it continues going. I could buy back, but if I get that type of move in that short period of time, hey, if you annualize that, that's a pretty nice return. So
Yeah,
it's just
exactly.
a rule. We have the 8-week hold rule. which is designed to keep you in winners that we use when we're in bull markets. So this is my version of the 8-week hold rule, except it's just 3 days.
Mm-hmm. So yeah, really great stuff, Harold. So this really kind of should help people kind of understand how to do these calculations and set these strikes, set your expirations, for doing some of these spread trades on your own. But let's go ahead and in this segment go through a few examples. So we went through GLD already in some pretty good detail. Let's take Apple. I mean, here's another stock, member of the Mag 7. It wasn't, the relative strength line on this one wasn't nearly as poor. It was just kind of marking time, a market performer, if you will. And remember, this relative strength line is versus the S&P 500. So you were below the 50-day moving average line and the 21-day moving average line. Basically, today, you got up to both of those lines. So first of all, are you going bullish or bearish?
I'm going bullish with Apple. Another thing technically about Apple, you see the bottom of that base found support at a previous base. That's another thing that I really like to see. So again, looking at the technical action of the stock was something that I decided, okay, this is where I want to put a option trade on. So yeah, that support there, that's a nice support area when you see something like that. And you've got that one too. So the base that is set up, again, Apple made that move up above the, it looked like it closed above the 21-day. So you got up above the 50-day, closed above the 21-day.
Like so just barely below both.
Very below. Oh, okay.
Yeah.
Okay.
Yeah. 0.1% below the 21-day and 0.2% below the 50-day.
Okay. Okay. So yeah.
Maybe a pixel away.
Yeah.
Missed it by that much.
Right. Right. But you see that upper trend line you drew. So that was a nice support area. Probably around 218 where it found support. And now it's just time. Is it going to make it above the 21-day exponential and the 50-day? So I'm not going to get into it now. I'm going to wait. I'm going to be patient. Again, that stock has to prove itself to me before I say, okay, I'm going to start putting money into Apple. So I've got my alert set, and I'm just going to wait and see if it works out. Then I'll consider putting a trade on. If not, if it finds resistance at those moving averages and sells off, well, I might consider a short in that other that's the upper moving average or upper trend line you just drew. But we'll have to wait and see. So if it gets up above the moving averages, I'll reassess it. And if it gets below that upper trend line you drew, then I'll reassess it again. It might be a good short candidate.
Yeah. And again, would you do a credit spread on this or a debit spread, or do you kind of just wait and check both premiums and kind of go with the one that makes the most sense?
Yeah, well, I'll be looking to do a credit spread because again, as I mentioned earlier, one of the things I really like about the credit spread is that break even is below the stock price.
Right.
So that's where I'll be looking to do if this stock gets above those two moving averages we just talked about.
Yeah, I should mention a very important point there. Having the break even below the stock price means that you don't actually have to have the stock move at all. It can basically hang out right where it is. It can even go down a little bit sometimes, and you can still get full profit on your bullish trade, even with the stock going down a little bit from your entry. So a very important point with the break even below your price where you enter. Let's take another look at another stock, CRS. Now, the steel specialty alloy area. This was just a very quick move it got a couple of these ants. These ants are kind of a special thing that we have in MarketSurge when a stock is having a really strong move with some volume behind it. It doesn't necessarily mean go out and buy it, but it just means, hey, there's a lot of buying that's happening here. So after this last ant that it got, it basically went flat, but kind of a pretty early pullback to the 50-day moving average line. So you going bullish or bearish here?
Yeah, I'm looking to go bullish with this trade. Not, looking at the technical setup, like you mentioned, it did kind of go sideways, had a nice orderly pullback. It's found support at the 50-day moving average, a rising 50-day. That's
Mm-hmm.
another thing I like to see with the moving average. So the 50-day is rising, and it was rising as the stock was kind of consolidating. So that's another positive. That's another thing you want to look at when you're doing your technical analysis. So that 50-day is rising. Now it's finding support. It's in a strong industry group, in the number one group. So it's in a nice strong industry group. So it's got a lot of positive things. Now the only question is, okay, is it going to find support at that 50-day? And then if it does, then I'll be looking to see what kind of option trade I can do on this. Most likely, again, I'll be trying to sell some premium. I do see a little bit of consolidation that I have to give up above before I really say, okay, this is something I want to start putting some money into this.
Mm-hmm.
About the last week or so, you got a little bit of consolidation, hit that 50-day twice. Today being the second time, and right there, and then yeah, you got them. I might just draw a little trend line above those those price bars there just to see. Okay, that'll yes, you have that support there, and then maybe draw a trend line above the price area there just to give me a little bit of a context. Yeah, so you got like a little bit of triangle, or you can even go a little bit horizontal with another trend line. So this is an art. It's not a science. So you can draw your trend lines a variety of ways, but you just want to do something to give yourself some context into taking that trade.
Mm-hmm. Last stock and Toll Brothers. Look, a lot of the home builders were definitely showing a lot of strength. I mean, we didn't even really touch on the 10-year Treasury yield, but of course, what the 10-year Treasury yield has been doing has had an effect on the home builders. But let's talk about Toll. Again, the relative strength was sharply up here. A little bit flat lately. Is this relative strength line going to come into play for you to determine whether or not
Uh,
you make a play here?
yeah. So the fact that it pulled back as the stock pulled back is not surprising. But yeah, it definitely that relative strength line does come into play. So as the stock makes a move to the upside, so just like a lot of stocks we saw in today's market, it had a nice reversal and a nice close, up towards the top of the range. Now we'll have to wait and see. Okay, is there going to be follow through? And there's a number of ways you can approach the stock. Maybe drawing a trend line from that was that 149 to the downside there,
Hmm.
up there at the top. That could be a nice entry, or just support off the 21-day. So either or, this stock is showing some signs of a potential strength and a move to the upside here.
So I really want to say thank you to the folks that are joining us live, and I wanted to take a couple questions that I'm seeing in the in in the Q&A kind of here. Some people were asking, okay, so do you ever take, well, you already answered this. You do take partial gains with your option trade. So you answered that of course, a lot of times you will take it at 50%. Do you target low beta stocks when you search for option trade opportunities or high beta stocks? Do you have a preference?
I'm typically high beta. I tend to gravitate towards technology. It's an area that I'm very familiar with. Technology stocks tend to be some of your high beta stocks there. So, and high beta stocks to the upside, and typically stocks that are strongest to the upside when a weak market that we're in, they're usually the best possible short candidates too. So, I'm particularly looking at more of your high beta stocks.
Mm-hmm. And another question here. So you mentioned that you do both stocks and options as components of your portfolio. And again, just to kind of remind folks, this is what Harold does for himself. He's sharing that. You of course have to be making your own decisions. But do you have a certain mix that you go for? Like, I'm going to have this percentage options, this percentage stocks.
No, I don't. Primarily, my primary focus is on the option trades. Occasionally, like I mentioned about Nvidia, where I bought the shares, I don't remember since I bought that was in May of last year. I really don't remember considering buying shares of a stock since then. So
Mm-hmm.
I'm always looking to trade the option, and I am not trying to have a certain mix of equity positions and stock positions. or in option positions.
Yeah, it's really got to be that special stock for you in order to entice you in there. Well, hey, Harold, really appreciate it. It's great to have you on the show again. As a reminder, folks, you're on what, once a week on IBD Live?
Yeah. Wednesdays is my day.
Was it Wednesdays now?
Yeah. Just got moved to Wednesdays. Yeah.
Okay, you just got moved to Wednesdays. Okay. So yeah, it was Thursdays a lot of days, and then you were on Mondays for a little bit. So we jostle around, and especially this summer, we had to, people were out and covering and stuff like that. So if you haven't checked it out, folks, investors.com/IBD Live, you can get a trial. Harold is one of our regular panelists, as well as
IBD Live.
Little advertising there. I'm on there a couple times a week. Allie is running the show a lot of times. David Chung, Mike Webster, of course. So really great group. And we start 10 minutes before the market open, and we usually go 90, 100 minutes, sometimes longer, depending on the market. So it's a great time. I also want to thank everyone for joining the podcast live, especially those that joined us live, but also those that are going to be watching this at the archive. Remember, you can get those archives at investors.com/podcast. And, like and subscribe, go to whatever your platform of choice is, and you can download it from that investors.com/podcast. You can watch the video if you listen to this, so you can kind of see some of these areas that Harold and I were marking up. And then let's not forget, we've got coming back to the show next week. Again, we're going to be going live Wednesday at 2 p.m. Pacific, 5 p.m. Eastern time. It's going to be Eric Krull, one of the co-authors of the Life Cycle Trade and manager and founder of Krull Asset Management. Eric Krull and I have been going back and forth on this latest follow-through day because he has everything broken down into your life-changing markets, your whipsaws, your slogs, your money makers. And he was showing me a lot of stuff about the trajectory that we were on and then how quickly it changed. So I'm sure that's one of the things that we're going to cover next week, as well as a lot of the data that he has on follow-through days and market studies that he's done. So always a great time to have Eric on, especially in times of turmoil and asking about seasonality. I'm sure those are things that Eric will be able to answer for you. So hope you join us next week. Thanks a lot for watching this time around. We'll see you.